University of Mumbai, MCOM Sem 4, Personal Financial Planning Question Bank Solution Part 1. Here we are going to solve all the questions from the subject Personal Financial Planning. Question number 1 in our question bank is: explain the concept of personal financial analysis and process of personal financial planning. One of the most important and obvious aspects of personal financial analysis is cash flow management. This will all about how much money is going in and where that money goes. Getting your cash flow under control is vital because you can do anything else with your money. Okay, so this is basically a personal financial analysis, means from what way you are spending your money. So, and you have to analyze means what? You have to study where your money comes in and where it goes out and how much return you get from your money. Okay, that is all about analysis your personal financial. So in personal financial analysis, asset include value of securities and funds held in checking or saving account, retirement account balances, trading account, and real estate. Okay, so this is all the assets in which we generally invest our cash, that is value of our securities and fund. And then we have a saving account, we keep the money for our retirement. Then we do trading account. Trading means we invest in the equity market, share market, and we also invest in properties, that is real estate. And liabilities includes any debts that individual may have, including personal loan, credit cards, students loan, unpaid taxes, and mortgages. Okay, so this is all the liability sides. Okay, so when we do certain type of investment in real estate, we take some loans. Okay, so this is what is our liabilities. Okay, then we have our credit card. This is also the liability till we don't pay our whatever purchase amount is there on our credit card. So this is also liabilities. We take, sometimes we take personal loan, we take car loans for our higher education, we take loan. Okay, so these are all the our financial analysis liability side. So we have to check both our asset side and liability side. This is what we are doing our financial analysis. Then the benefit or personal finance include an ability to effectively budget for cost, higher saving rates for retirement, and making prudent investment choices that will help the individual reach his or her financial goal. Okay, so what is the benefit of personal financial? It's include the ability for effective budget for cost. Okay, so by analysis our asset side and liability side, we can budget, we can prepare a proper budget statement. Okay, higher saving returns, rates for retirement, and making prudent investment choices that will help the individual reaches his or her financial goals. Okay, so we everyone has a financial goal, and it will be depend upon the individual what will be the financial goal. But once we do our financial analysis, it will be very effectively we can plan our financial planning, and which this can fetch us the good returns. We can save for our retirement with the good returns, and we can make a prudent decision about our investment choices, and this all will help us to get our financial goal, or we can reach through our financial goal. So this is basically the concept of personal financial analysis. Then let's see the process of financial analysis. The process of personal financial planning. Okay, so this was the analysis and the planning. It's a one and same. For doing a planning, first we have to analyze what actually we have and where the money is going and what type of assets and liabilities we have, so we can plan for the future. So let's see now what is the process of personal financial planning. So now let's see the process of financial planning. So financial planning process has 6 steps to help you to reach your goal. First step is to determine your current financial situation. Okay, so you have basically 6 steps to reach your financial goal, and first is to analyze where you stand. Okay, how much financial assets and liabilities you have, or you can just make a list of the items that relate to your finance. So what is your saving, what is your monthly income? Okay, job earning. Okay, so earning includes what? Your job earning, allowances, gift, and interest on bank account. Okay, this is your monthly income. So from various source, whatever returns you are getting, it will be your earnings. So you have to find out your monthly income. Then what is your monthly expenses? Okay, where your money, how much money you are getting and where this money goes, you have to find out that. Okay, you have to find out your monthly expenses. So this may include family planning. Uh, then you have issues like providing for your children college education, or it may be your education, or you may having a school going children, so you want to pay the fees for them. Okay, so this can be your monthly expenses. Then supporting your aging parents or relieving immediate financial pressures that could help you to maintain your current lifestyle and provide for retirement. Okay, so this is all what is all your expenses is. So you have to find out what is your income, what are your savings, and what is your expenses. Then debts, money to go to others. Okay, you might have given the money to someone. Okay, so you have to just analyze what is your debts. Okay, then good way to estimate your expenses is to keep a careful record of everything you buy for 1 month. Okay, so if you want to find out what is your current financial position, okay, what is the money you earn and where exactly it goes, you should have to estimate it by keeping a proper record of everything you buy in the 1 month. You can use a small notebook to track your expenses. When you have determined your financial situation, you will able to start planning. Okay, so once you have whatever means what money is coming in and where it is going, it will be easy for you how much you can save, how much you can invest. Okay, how you can plan for your retirement. Okay, which investment can give you better return. All this you can plan once you have determined your current financial situation. So figure out your current financial situation, make a list of items that related to your financial. This is your first step, determine your current financial situation. Just find out what is your current financial situation. Okay, after determining your current position, the second next step is step number 2, that is develop your financial goal. Decide where you want to be financially. Okay, so every individual has a different financial goal. Some want very peaceful and satisfied life, and some just want more from their life. They want a luxury car, luxury house, they want a second home in some hill station. Okay, so these people will be have a uh, which type of people will have a high financial goals, and for that they have to work hard, they have to invest in share market where they can get a high returns and they can fulfill their financial dream. Okay, so as per as individual name, you have to develop clear financial goal. Think about your attitude towards money and ask yourself some question. It is important to spend your money now or to save for later for the future. Would you rather get a job right after high school or continue your education? Do your personal value affect your financial decision? Okay, so you have your personal values. Okay, so once you uh, if you continue with your high schools, your masters and all, you will in future you will get a good job. But if you opt for a job and simultaneously you do your studies, then but naturally your studies are going to affect. But it this all will depend upon the personal choices. So every individual has a personal needs or personal wants in their life, and accordingly they choose or take their decisions towards the means what to do in their life. Okay, so do your personal values affect your financial decision? Values are a belief and principles you consider important, correct, and desirable. Different people value different things. Okay, so then you have a needs and wants. Another important aspect of developing financial goal is knowing difference between the needs and your wants. Okay, so needs are whatever we need. Okay, it is food, shelters and clothing. Okay, so need is something you must have to, you should have for your survivor. Okay, such as food, shelter and clothing. A want is something you desire or you could like to have to do. Okay, suppose I want to buy a car, so that is my want, it is not my need. Okay, so I can use public transport for going from one place to another. So want is something you desire or could like to have or to do. For example, if you live in the area where the winter is cold, you need a coat. So you may want a leather jacket, but other less expensive coat would also keep you warm. Okay, so it is your choice whether to go for a cheap option or you want a leather jacket. Okay, so that will depend upon the individuals. Okay, well, how and what they want, so only you can decide what specific goals to pursue. Okay, so it is the individual choice to develop your financial goal. For example, you want to save money, so you would save rupees 5,000 every month or 15% of every paycheck. Okay, so that is your decision how much you want to save or in what percent you want to save. Okay, so either you can save 5,000 every month or 15% of your check, or you can save more or you can save a less from this. Okay, so this is your step number 2, where you develop your financial goal. So your first step is to determine your financial position. Okay, what is your financial position at current, and the second step is to develop your financial goal. So your step number 3 is to identify your options. Okay, step number 3 in your personal financial process is to identify your options. So after determine your current financial situation, second step is to develop your financial goal. Then you have to identify your options. Okay, so it is impossible to make a good decision unless you know all your options. Okay, so there are various options which is available for saving your investment or investing your money. So you should all know all the option which is available, so you can choose the best possible option which is as per your financial goal. Okay, so once you decide your financial goal, you have to see the various options through which you can reach to your financial goals. Okay, so generally we have several possible course of action. Suppose that you are saving rupees 5,000 a month, you might have this option. So expand, you have first you are saving rupees 5,000 a month, so you might have this option to expand the current situation. Okay, so you are expanding your current situation. You may decide to increase the amount of money you save every month to rupees 6,000. So now from 5,000 you are going to save rupees 6,000. Or to change the current situation, you would invest in stock instead of putting your money into the saving account. So if your financial goal is high, okay, so to reach that high goals, you will instead of saving this in the money in the saving account, you will take the risk and invest in the stock market, where you are going to get a high returns. Okay, so you are ready to take risk. The next is start something new. Okay, so you with this money you will start something new, or this money can be also used to pay off your debts. So whatever debts you have, okay, you will use this money to pay that. Then, or you will continue the same course of action. That means you will not make any changes. You are saving 5,000 a month, you will continue doing that. Okay, so there are various options what you will do with your money, how you are going to save, how you are going to invest, but you should know what are the different options available. So however, in each cases, be aware that the cost of your decision may outweigh the benefit. Okay, so whatever decision you are going to take, it is going to benefit you in achieving your financial goal. Okay, so in the process of financial planning, your first step was to determine your current financial situation. Second is to develop your financial goal, and third is to identify your option. Now let's see the fourth step. So step number 4 is evaluate your alternative. So in this step, you evaluate your alternative as a part of a financial planning process. Okay. So once you have various options in your step number 3, you cannot offer all the options which are available. So if you have 5,000 which you are planning for saving this in a saving account, you cannot invest that 5,000 in your stock market, or you cannot do something new with that 5,000. So in while investing, you have a various option and you have to choose one of that, as you cannot offer all the option. Okay, so use many sources of financial information that are available. So you have to study, you have to analyze, you have to source all the financial information that are available. Look at your situation in a life, your present personal financial situation and your personal values. Consider the consequences and risk of each decision you take. So while making a correct decision, while taking choosing one option from various available option, you have to be look for your personal value. You have to consider the consequences, what will be the result of it, what is the risk associated with. You have to keep all this in your mind and take a perfect decision. Okay, so source of financial information, it is important to keep up to date with your social and economic condition, because they affect your financial situation. Okay, so for example, if you take the example of any company or any manufacturing company, if it is a fashion industry, okay, so you they have to always keep a design the trendest cloth may be a good investment. Okay, whatever is a new, what is a trend in the market, to keep an eye on that, then they can make a good investment. In the same way, you even while doing a financial planning, you have to see which are the investment which is giving you the good return. If you are thinking of getting high return from the stock market, but economic conditions are not good, okay, whatever investment you are going to do in the equity, it might be come down because economic conditions are not that good. Then you in this way you have to eliminate that decisions. Okay, so you have to go as per as the economic condition. So it is very important to keep yourself up to date, so that you can make a right decision. So source the financial information. So for this you have to study, you have to find out the correct information. Then you have to study the consequences of choice. Okay, so you have to study what will be the consequences of choice, because instead of putting that money in the saving account, you are investing in the equity. But this market is volatile. Okay, you will never get a fixed return. You are expecting a high return, but this can be a vice versa too. Okay, so you have to find out what is the consequences of choices. If I lose money, whether I have the uh, have another options, or I have the backup ready to fulfill to cover up this losses. Okay, so this for that you have to always find the consequences of choices. So when you choose one option, you eliminate other possibility. You cannot choose all options. Suppose that you want to become a full-time college student, you also want an income, you could earn at a full-time job. Okay, so see, you have a choice. You want to become a full-time college student. Okay, so you can get a good quality education, and you can pursue good marks in your exam. And another thing is that you also want to earn it simultaneously while doing a job. Okay, so you want a full-time job, you want a full-time college student, but this thing both cannot be possible. So if you want to make a choice, okay, so in choosing to pursue your education, you have to give an opportunity to work full time for the moment. Okay, so you cannot do simultaneously both the things, so you have to give up on one thing. So however, choosing involves more than knowing what you might give up. Okay, or and what after giving that, what you are going to gain. Okay, so now currently if you are going to give up your job and you are pursuing your education, so once you get a good education, a good score in your educations, in your academics, so this will fetch you a good job in future. Okay, so this is what you are going to gain. So you have to make the choice. Okay, Next is understanding risk. Okay, so everything is associated in risk. Okay, whatever choices, whatever alternatives you are choosing, understand what is the risk. Okay, so inflation risk. Okay, if you want to buy a car until next year, you expect the possibility that the price may increase. Okay, so whatever prices are there uh, today, current prices, it is not going to be there in future. Okay, so you have to be risk ready. Okay, so if you are planning for your finances and you have a financial goal of buying a car, but you have taken the car price for the current year, but the next year the car price will increase, so you have to always calculate a inflation risk. Then interest rate risk. Okay, so interest rates go ups and down. Okay, it is not going to be same, so which may affect the cost of borrowing of or the profit you earn when you save or invest. Okay, so if you are investing in say in the bank, even their rates keeps on fluctuating, so you are expecting a 5% rate in every year, but suddenly the as per as the policy, the interest rate will be 3% or 3.5%, and your investment will go down. Okay, on the same way, if you are taking some loan and then you are expecting it, you have taken the loan with a 9% increase, but next year they are going to increase it by 11% or something, then you always have to be ready for the future rates also, so you have to calculate the future interest rate too. So this is the risk. Then next is income risk. Okay, so you should also predict that always you cannot earn. Okay, so nowadays basically when we don't go for a work, we have a limited holiday, paid holidays, rest all you will not be paid if you are not going for your job. Suppose if you are unwell, you are hospitalized, or you have a family problem, an accident, any change in your field of work. Okay, so whatever work you are doing now, it has changed, means there is a latest technology or something, and you are not you are not aware of that technology. Okay, you are basically suppose if you just know the technical knowledge, but the new technology which has come, they or it is also need the IT knowledge, then this is also type of risk you will face in your work. So every time you are not going to get the same amount of monthly income, so this is a monthly income, so this is also the risk. Then you have a personal risk. So driving for 8 hours in icy mountain roads may be hazardous. Okay, so risk may not be worth the money you may would save for the air fare. Okay, so sometimes we take a decision where we want to go by air or by road transport, but by going road transport, you have a risk in your life. Then you have to always choose for the air you choose for the air mode, which will be costly, but here you are saving your life. Okay, so you should understand various type of risks which are associated with your life, and accordingly you have to take your financial decision. Where it is necessary to spend, you have to spend, you cannot save on there. So this is called as personal risk. Then liquidity risk. Okay, so sometimes we invest in such assets where we liquidity risk there is a time where we cannot in means we cannot liquidate in a faster way. Okay, it will take time. Suppose if you are investment you made an investment in house, then it will be difficult to convert that money, because the house your property rates are very high, and you will not get a client very fast. Okay, so it will take time to sell, so it is not a liquidity is very less in such type of asset. Okay, so this is a liquidity risk. So whenever you are evaluating various alternative about your financial planning, you always have to consider all types of risks which are associated with financial planning. So this is your step number 4, where you have to evaluate your alternatives. Now let's see the step number 5. So step number 5 is to create and use your financial plan of action. Okay, a plan of action is a list of way to achieve your financial goal. If your goal is to increase your saving, a plan of action would be to cut back on spending. If you want to increase your income, you might get a part-time job or work more hours at your present job. You would use the extra money you earn to pay off the debt, save money, purchase stock, or to make other investment. So always you have to create and use your financial plan of action. So once you evaluate the alternatives in your first step, you have to plan. This is the step where you are going to be action oriented. Okay, so now you have to see your financial you how you will achieve your financial goal through the choices you have made. So if your goal is to increase the saving, a plan of action should be cut back on spending. So you have to, if you want to increase your saving, then you have to cut back on your spending. If you want to increase your income, then you have to work more. Okay, either you can take a part-time job or you can increase the number of hours at your present job. You would use the extra money you have earned for paying all your debt, or you can use it for saving purpose, or you can purchase stock or make other investment. After the step number 5, your last step, that is step number 6, is to review and revise your plan. Okay, so whatever steps you have followed, you always have to review and revise your plan. Okay, so now again from step number 1, you again have to analyze yourself and you have to take proper review and revise your plan. So as your age grow, you might get a hike in your salary, so your financial goals can change. You have a better option for the investment, or it can happen vice versa also. As you're growing older and if you have a business, you cannot put a same potential, or you cannot put some same, or you cannot give a that much time to your business, and then your earning will start decreasing. Okay, so this can be either way, so you have to be prepared. So in the step number C, you always have to review and revise your plan. As you get older, your finance and need will change, so that means that your financial plan will have to change too. You should evaluate and revise it every year. So in the step number 3, you always have to review and revise your plan. Okay, so in of personal financial process, you have altogether 6 steps. First step is to determine your current financial situation. Second is to develop your financial goal. Third is to identify your options. Fourth is to evaluate your alternative. Fifth is to create and use your financial plan of action. And sixth is to review and revise your plan. Okay, so conclusion is that financial planning process should be realistic, specific, clear time frame, and should help you to take what type of action to be taken. Okay, so this is our answer for the personal financial planning process. Okay, for next questions or for next answer, please prefer subscribing and click on notification bell icon for next part. Thank you.